So I'm Steve Dyer. I'm one of the founding partners and the executive director at Semper. We manage a land fund, U.S. commodity crop fund called Maia. We have been around since 2019. We started our fund right about that time. Our first real investment dollars went in 2019, and most everything was deployed in 2021 and 2021. So we're here to present you guys with an opportunity in U.S. farmland. Marty, do I tell you to flip the slides? Do I do it? Or?
Is this the first? Can you see the slide?
Yeah, I can see it. Yeah.
So I'm going to try to do it right now.
Okay.
There you
go. Oh, there we go. So why do we do this? Why do we start this farmland fund? So my partner and I, Ciro Echesortu, he's an Argentinian national. He and I both worked together at Louis Dreyfus. He was the CEO. I worked directly for him. He left in 2016. He already had a farm operation in Argentina and Uruguay. They manage now about 350,000 acres total is what they farm. They own about 250,000. So he and I have been talking about why do we want to be in U.S. farmland? Well, we were looking at the prices of commodities coming off of the 2011-12 peaks into sort of the troughs of the 17-18 time period. And farm values are tied to the underlying commodity. You know, the revenue that comes off that, you know, is tied to the market price. So we were trying to find the right timing to launch this farmland. We sort of identified a cycle low in 2018. We had the idea, we put the fund together, we sort of ran out to some of our folks and friends here in New York, and we said, hey, this is our idea, this is what we got. Everybody's like, well, you know, that's a great idea, but you know, you guys need to raise some money, you need to buy some farms, you need a track record. It's okay, you know, that's fair. So we did that. We went out, my partner, he put in the seed capital. We raised another friends and family round. We bought our farms. We've got close to $100 million under management right now, and that's Fund 1, and we're here raising Fund 2. So we've got an experienced team of asset managers. We're all commodity guys, agricultural guys, everybody's special at their own sort of event. So we want to show you kind of what we do that makes our fund different than most passive farm funds. So Marty, I'll walk you guys through the macro a little bit. I know I only have about 20-25 minutes, so a lot of you guys have seen this before. We're not telling anybody anything they don't know. World population growth is growing. The arable land per capita is going down. There's no question about that. You know, there's housing, there's solar stuff. We need increased food production. It's got to come from yield. We can't make any more land except for Brazil, but that's a different story. We're talking about US. Per capita wealth is increasing. People make more money, they demand better food. I've seen this firsthand. I've spent a lot of time in China, Asia, other parts of the world that I've seen, you know, in China for 20 plus years. When, you know, they start to make money, they want to eat better food, they need higher protein. So, you know, they've got hogs, they got chickens, they've got, you know, other things to feed. So they've got to have the increased commodities and farm products to have that happen. Okay. So why U.S. farmland? You know, does it make sense? You know, why are we doing this? Well, it's an inflation hedge, we think. I think we all kind of realized that during COVID, when, you know, we sort of went through that trough. Everybody was scared what was going to happen, and all of a sudden you hit the inflation cycle. Food prices rose. Obviously, we know what happened with, you know, energy prices, everything else. Everything rose. So price of farmland went up too. So we use it as an inflation hedge. You can buy the underlying asset, participate off the inflation cycle. Correlates very well to the CPI. These are our numbers. We think that there's a 70 or 80% correlation with some dislocations that sometimes go a little bit higher or lower. Farmland, US, it's a low risk investment. It's a real asset. You can buy it, you can hold it. There's clear title to it. You've got the food security element, which that's been a hot topic in sort of the Middle East and some other folks. Low volatility. stable long-term returns. I think, it grows slow, but you've got to be in the game to make it work. Low obsolescence factor, whatever happens, you still have the land, it still produces, it still makes money. Okay, Marty. So I just want to kind of tell you guys where we are in the value chain. The ag value chain is super fragmented. There's a lot that happens from when the farmer puts the seed in the ground all the way for the product to get to the store. I've been involved in all sectors of this as an agricultural commodities trader. Semper, we're involved in the two front ones, the inputs and the production. So we start the whole value chain, super important. So that's where we sit in the entire ag value chain. Okay, Marty. So again, what's our business strategy? What makes Semper different than everybody else? We're active land managers. We're not passive. We don't buy the farms, sit on them, call the farmer once a year, ask for a check. We actually do stuff. We have kind of a three-legged stool that we use to make money. So what do? We try to buy the assets at the best possible price. We don't mind buying the asset that needs a little bit of work to do the capital improvements. And we've got some test cases. I'll show you guys how we did that later. And we do some other operational things that our lease incomes are usually better than most. Okay, Marty. What kind of technology? Yeah, so we use technology when we buy the farms. We use technology when we grow stuff. Sometimes we do our own production, and sometimes the guys that we lease it to. Ag tech it's not new, but a lot of things are progressing really fast.
Do you use any of the precision agriculture type?
100%. Yeah. And we've got some pictures I'll show you guys later of some of our guys. When they pick corn or soybeans. Yes, sir. You can. Okay. You can test the yields, and you can do almost anything you want to do today. Yes, sir.
Sure. The bullet point on the far left, previous slide.
Yes, sir.
Commodity cycles.
Yes, sir.
There's been a lot of discussion about the super commodity cycle.
Yeah.
I'm not sure where you are in that super commodity cycle, water, et cetera, but can you plot farmland prices against that super cycle, and how is that figure out? I'm sorry for.
No, it's so.
It's a probably important question.
We spend a lot of time thinking about that. Commodities super volatile. I don't think that any of us expected the rise in prices that we got, post COVID, and then you had the Russia-Ukraine situation, which catapulted everything else. Higher prices in commodities lead to more production. Doesn't always mean you get more production. It just means, it's weather dependent. Are we in a super cycle? Sir, I don't know if I could answer that correctly, but our view is that commodity prices will continue to appreciate, which is going to grow.
Exogenous factors like Ukraine, because Ukraine,
Yeah.
Brazil, and us are the three big bread baskets
Yes, sir.
of the world, correct?
Yeah.
So how does that play into your equation, whether it's problems in Brazil and then Amazon, whatnot, or Ukraine and where? We're the most stable, I guess, of the three.
We're the most stable for sure. You have Argentina, which is a huge producer, but they've got their own problems, currency wise. Brazil, they're continuing to cut down rainforest to grow more of everything. US, we've got 300 million acres of farmland. It's pretty much it. Doesn't include ranch land or anything else, but row crop land. We've got to get the yield off of that 300 million acres. The US, the world, if you get a severe weather pattern, a massive drought in a particular country, you will for sure have another commodity super cycle. When that happens is difficult to predict, but bound to happen at some point. So, kind of back to my other point, you got to be in the game on the farmland to realize that. So, yes, sir. Okay.
10 minutes.
10 minutes. Okay. All right, I'm gonna move fast. All right. Okay. So, where do we invest? We're row crop guys. Again, we're agricultural commodity traders. That's where we've sort of grown up. That's what we know. So we stick to our sort of bread and butter, which is the Midwest, the corn and soybeans, the Mid-South, corn, soybeans, wheat, cotton, you name it, peanuts. The Southeast grows a little bit of everything. So that's our focus area for now. Okay, Marty. Okay, this one I want to talk to you guys about, like why we're different than other farmland funds. So we will improve farmland. We've got, like I said, we've got test cases. We've gone out, we've bought a farm for $5,000 an acre. We put $800 an acre in it, and we sell the farm for $8,000 an acre. So we don't mind doing the hard work to make the farm better, the yield's better, the production's better, the asset's better when we leave it. So the second thing, hands-on operation. We know these farmers. We want to put the best farmer on the land and make sure that he's growing the best crop. Portfolio management. One thing that we do that a lot of other folks don't, we actually, because we're commodity traders, we buy and sell the land. So sometimes, we might want to, buy the Illinois farms, wait for a year, get the appreciation, sell those, redeploy it in Arkansas. So we'll do some land arbitrage that adds a little more value annually to ours. We 1031 everything, so we're trying to stretch our dollar as far as we can. So we'll sell a farm, 1031 it, stick it back in, buy something else. So we're gonna defer our tax gains till the very end, not the operational, but the capital gain. Clustering. If you'll notice on my map on the previous slide, we buy farms in certain areas. So we'll pick an area in Illinois, or area in Arkansas, area in Tennessee, or area in Georgia. We don't want to farm in Washington. We don't want them in Oregon. We don't want them all over the U.S. We want to have a collective group of farms that we can actively manage the farmer network and the production. Active risk management, again, on some of our leases that we do flex leases, we do our own custom farming. We're comfortable with the yield risk, and we can manage the price risk as well. Yes, sir.
Quick question, business, I'm thinking Bungie, Cargill,
Yeah.
etc. What split is between the big majors and the institutionalization, corporatization, if you will, of farmland versus what you guys are doing? How does
Okay.
that affect you?
Yes, sir. Those guys don't really own any farmland.
Okay.
They're purely trading and processing, bean crushing, those kind of things. So
Okay, so there's no real corporate land ownership in terms of farmland?
there's investor ownership, but not
Okay.
corporate ownership. Yes, sir. Okay, Martin.
Are you
Yep.
doing any,
Yeah, go ahead. Yeah.
are you doing any sustainable organic
Yes.
farming, or
Sus-
is it all big ag, lots of chemicals?
We're doing a lot of sustainable. No organic, but if I can get to it, I'll promise I'll tell you what we're doing there. Yes, sir.
I wanted to ask, how do you intend to improve the productivity of the land?
Yes, sir.
You made that a major item of.
We did. So what we do is we want to make sure the soil health is there. And I'm gonna answer your question as part of his. So regenerative agriculture is the new buzzword in ag. It used to be sustainability, but nobody knew what sustainability is. So regenerative is actual, a real thing. So we use no-till, we use cover crops. No-till means basically, a lot of times on certain farms, you cut the corn, you don't go in, use more diesel, plow it up. We just leave it there to rot, improves the soil. Yes, sir. Cover crops holds the soil in place, puts more nutrients in. There's certain ones you put in there. So we want to deliver a better product than we started with. So that's why we use the regenerative farming practices basically on all of our farms. Everything we do, we have regenerative. That's how right now, no organic. Organic is a totally different.
What does fertilizer play?
Fertilizer, you have to make sure that you have the right mix of fertilizer, right crops. Part of it's about yield, and part of it's about cost. And everybody knows fertilizer prices went through the roof with the Russia-Ukraine situation. So
We have a little bit more than 5 minutes.
5 minutes, okay. So we want to make sure we're using our fertilizer to the maximum of the yield and the cost. Okay, quickly, how do we buy our farms? We have a super intense due diligence process. Talk about technology. We look at satellite imagery for years to make sure that there's no flooding or droughts or anything on the farm. We figure out if there's any issues, and then we go in and improve the farm, be it water management, irrigation, soil improvements, ditches, whatever we need to do to fix the farm to deliver a better product. Okay, Marty. Real quick, here's a case study on some improvement plans. I think someone asked how we improve. So these are two farms, one in Illinois and one in Arkansas. You can see where when we started the one in Illinois, it had 170 bushels an acre corn. We did some work to it, and we were able to get 220 bushels a year out of the next year on the property. The one in Arkansas had 160 corn, and then it went immediately to 220. Just by irrigation management, leveling the land, making sure that there's no dead spots. So and when you get another 20, 30, 40 bushels an acre, it's a huge revenue stream. Yes, sir. Okay. I was going to try to go fast. So,
You got 4 minutes.
4 minutes. Okay. All right. I'll hang around later in case anybody has some.
You're coming to dinner, right?
Yes, sir.
Yeah.
Yeah, I'll be there. Okay. Regenerative. This is the slide, ma'am, you asked about. What do we do? Again, regenerative. A lot of social responsibility, a lot of innovation, a lot of tech. I can talk to that a little bit later. But Marty, I want to get to kind of our team and just who we are and why we think. So just some quick pictures of what we've done. Some of our farmers, our network. Okay. This is our team. Ciro, he's my partner. He was a former Dreyfus CEO. Myself, Miguel, who's our agronomist, has managed hundreds of thousands of acres in the Delta. Our CFO, our analyst, Juan, who's here with me, and two other gentlemen who are agronomists. Okay, Marty. Okay, this is more of our team. Okay, I'm going to skip to the next one. Okay, our main partner, Sabos, like I was said, this is my partner's company. They started in the late 90s, and then here where they are today, managing 300-something thousand acres across South America, mainly Argentina, Uruguay, and a little bit in Paraguay. This is why we can do what we can do, is because we have the resources, we have the people, we have the team that understand the assets and understand how to make farming work. One more, and then I think that'll be it. But just to give you guys an example, this is what Sabos does. I mean, we could put it in country terms, but they grow a tremendous amount of commodity products, mostly beans, corn, wheat, sunflowers. And that's all I got, Mario.
Well, so I think we have some questions.
Yeah, sure.
More questions from the audience?
I know it's not your area. One of the areas we're seeing a lot of investment is vertical farming because of location
Yep.
cities and close to the consumer.
Right.
I love everything you're doing here, but just general thoughts. Do you view them as a competitor or just they can't get the volume that you guys can get?
I think that I wouldn't view them as a competitor. I'd view them as a colleague, more or less, because we're not going to grow lettuce. We're not going to grow spices. We're not going to grow the kind of things. I mean, those guys they harvest lettuce every day, and we're not quite like that. I think there's, for us, like our farm, there's very, very, very little competition between the vertical farming and what we do. Yep.
On the West Coast, I've been doing a lot of agri-tech, and one of my friends there runs a firm that genetically changing the rice to be able to withstand certain temperatures.
Right.
Where do you stand with regard to genetically grown goods?
That's an interesting point you bring up. I want to start with one thing, go the opposite way. If we didn't have genetically modified seeds, we wouldn't have enough food to feed the world. There's just no way around it. We're starting to see countries like Japan, Korea, a few others come in and want genetic non-GMO products. So there is a trend of moving back to non-GMO production. Mexico at one point said they would not take any more GMO corn from the US. They dropped that because they realized if we don't take some GMO products, we'll never get the corn to feed the cattle. I think that there's a good balance between the two. I think that you need genetically modified seeds because otherwise you won't have the production. You can't get the yield off the farms unless you have some sort of enhanced yield. But I definitely think there's a market for non-GMO.
Well, I agree that was the whole point of what you're doing.
Right. Right.
The other thing that I was looking at is that technology, AI type technology,
doing what I call, using lasers to destroy like, weeds.
Yeah.
You know, and then learning from that process.
Yeah.
I mean, are you guys implementing a lot of this AI technology in farms?
Last week, we had a team meeting with some of our first round investors, and we were shown a demonstration of drones spraying the fields. I've never seen that before. It was just amazing. The drones held 5 gallons of the chemicals that they were using, and you just deployed them, you know, programmed in, deployed them, off they go. They come back, fill them up, off they go again. They've got heat and sensors that know where to deploy how much of any spray to any area of the field. The laser thing, I'm not totally familiar with, but as we get further down the road in ag, things are happening a lot faster than I ever thought that they would. I never imagined that we would see drones spraying the field. So
Yeah, I mean, actually, I spoke to a pretty big drone company last week, and they've become very, the application of AI team-oriented drones is growing phenomenally. I mean, that's what they're using right now to bomb Ukraine, bomb Russia, right?
yeah,
So anyway, guys, I don't have time. But
I'll hang around.
He's gonna be hanging around, and he will be at dinner, and also Mary Beth will be at dinner also. So Mary Beth and is there
Juan's part of the.
Right, so they're well
Okay.
represented, and they'll be at dinner, and also they'll be hanging out in the back room over here, so.
Okay.
All right, so, thanks so much, great job.
Thanks, Marty.